following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. And want to mention one thing. First of all, scanner, log out, log on. Doing a lot of that for the past day or two for some folks. Not a lot of it, just periodically. We're actually rolling out a new version in about 3 hours, and that's going to fix that. We were trying to, give the data as fast as we can, and there was a little bit of a hitch in the last version. We didn't catch it, so we had quite a few users on board recently, and about 2.5, 3 hours. Hopefully, you guys will get an email and an upgrade notification. You'll also get it within the current scanner. We'll be able to kind of send you a message in there. So thanks for sending those emails in. I appreciate you hanging in there with it. And hopefully this next version will fix that. Pretty sure it will. Let's take a look at gold. We're going to take a look at the June contract here. And we talked yesterday. Here's the weekly, just kind of backing up and making sure we still have a bearing on what's going on here. There's still no, immediate danger of the long-term trend, basically being north here. And let me see if I can get my chart to work here. And we always talk about do we try to pile into something on the shorter term time frames, or do we wait for stronger signals to happen? Well, we talked about 1253, 1254, and then maybe a better area was 1238, 1240. Getting into this balanced area for long-term guys who are looking at those weekly charts. You can use these balanced areas as collection areas and then kind of call it quits below the bottom of the profile. Remember, this is, we had a profile up here below price action. That's relatively bullish. And the weekly's no endangerment, and we've kind of closed back above yesterday. Even though we pierced this, we closed back above 1253, 1254. I like how this is acting. I think we're going to make another leg up here. I'm not saying we're going to shoot the moon here and go to 1300. By the way, Sunday morning, Larry probably already knows this. Moon, the Earth, Sun in a direct alignment, and the markets will not be open, unfortunately, when that planetary anomaly happens. How does that affect gold? No idea. But just want to let you know that I think you got a trading opportunity here. I think you've kind of had a collection area situation yesterday, and I love how this thing closed back above that profile above 1253, 1254. Phew. All right. So where's the targets on this trade? Initial targets are going to be 1264.20. All right. Then you're going to have to, I think okay, so, 1253, 1254, play the defense, give yourself a couple of points. You got a good risk reward here, 1264.20 up top. And again, I cannot read the den while I'm talking, so I apologize. Sometimes I have to look over there. You always want to try to set things up. I mean, bare minimum, 1.7 and above to 1 risk reward ratio. A lot of the automated systems that we have, and we've been doing quite well with those lately. They don't, the 50% and above winning percentage that's a real hopeful target. But in reality, 50% is really a decent win-loss type scenario. So when you're putting that together, you must have a risk-reward ratio that's better than 1-to-1, 50-50 win percentage. Guess who's going to win at that state? The broker. So you got to have the risk-reward ratio in line. And, 2-to-1, 3-to-1, 4-to-1, 5-to-1. We talked about that yen trade. That was a really good 5-to-1 risk reward ratio. I mean, give yourself a little room below that 105.5, 1040 targets. And with gold here, 1253, maybe you give yourself a little bit of a pain threshold down to 1250, that general area. You got 1264 up top. Then you're looking at 2.5, 3.5 to 1 situations like that. Yes, Jam. The chewing gum is completely off the table as being able to do that while looking at the den also. So that's the situation on gold. Again, we're talking about things that are, dollar reactive here. So as we look at the dollar, we reached that neighborhood yesterday, 95.65, not backing off really, which is kind of scary for shorts here. Hovering right below that unfair high on the weekly. These are all in the scanner, folks. And again, if you're joining us late this morning, we're getting a new build out of the scanner today. Have had a lot of people get on this particular product lately, so we're having a new build come out, which is going to take care of that log off, log on feature. We're actually taking that completely out of the scanner build, so there's really no way it will happen again after today or after this rollout. And we've had a lot of new server capacity for that to make that happen. So as we look at this dollar, keeping that in mind, that the dollar is hovering around those weekly unfair highs and not really wanting to back off, which is concerning for shorts. We're going to take a look at crude, and we talked a lot about where's the buy point on the pullbacks for crude. We talked a lot about 46.94, these 240 unfair lows. Talked about not buying crude oil up in the stratosphere up there, down into these daily unfair highs around 46.35. So that collection area, just kind of like gold, was a trading opportunity if oil had pulled back here. So we've met those yesterday. It was interesting to watch that, and wow, turned the wrench the same way, huh? Amazing. And amazing that crude is not really backing off farther than that. I'm actually shocked. So here's the daily. You got 48.36 today, new profile. If you want to short this, I think to go short or go long this in a big way right now is not the trade. These are trading opportunities with crude right now, and I think you've got to look at the short term, just like we looked at those 240s, that 46.94. As an area to kind of do a trading opportunity, but waiting patiently until the market comes to you. So what do you do with this now? I don't think you have a lot of leverage on the long side. If you're going to put a gun in my head, I think you've got a contra trade against 48.36 on the short side. And it's a real short-lived situation because you're playing with fire. So I think this is just a step away from crude oil right now. Don't see a lot of leverage here. The odds are not big either way on this particular trade. We'll be right back, guys.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. Man, these breaks are so short now on TFNN. Slave drivers. Can I have a glass of water, Tom? No, get back to work. I get that all the time. So, but that means more content all the time. And Russ in the den, crude oil, I'm looking at the Canadian dollar here. We've talked about this. There's such a mixed bag in my mind going on with this crude oil trade. Canadian dollar becoming, more devalued as this thing kind of ramps up here. I know the U.S. dollar is getting stronger. It's little bit of a indicator there, but these things usually Canadian dollar led this crude oil rally, and as it turned, on the weekly, remember that we were kind of talking about that. We were looking at the XLE. There's a lot of things that caused us to start nibbling in the high 20s on crude oil. And that was almost a 100% move ago. So now, we're kind of getting some opposite indications here, and it's just concerning fundamentally and relatively looking at things across, the normal oil landscape here. Just concerning to go long here. And I know you're probably looking at the scanner going, well, he said to go short earlier, and it looks green across the board, and the air's up, and so again, these are short trading, just contra trade, little trading blips. Yes, the long-term situation on crude oil is still scary as heck for shorts. So we're in a mixed bag situation. I can beat that to death even longer if you'd like me to speak about it, but crude, stay away. The yen trade, talked about this yesterday. We're kind of compressing up here. We came off that 1040 almost to the tick yesterday. The high was 1038.5, which is insane. That was that risk reward trade and kind of make your whole year type scenario. Back the truck up around 105.5. I hope Tucker's listening because I'm using his phrase there. But we talked about this possibly even going higher, not a place to short at 110.40, just a chance to take the 500 pip trade off, basically. So, when you see things, when you see major inflection points, you want to see these types of. Let me pull up the Forex section. There's the JPY USD. So bottom 8. So we're just sitting slightly below that 1040 right now. Let me just pull up the landscape view. There it is. Going up into it, backing off just a tad, and then kind of compressing back up into it. These are not shortable situations. These are just, hey, let's take some weight off. Let's don't be a pig. Is it a hog or a pig? And let's see what happens here. Let's see. Today's Friday. Let's see if we get a weekly close above the 240. Then we're going to feel much more rosier about having some more opportunities above there. But right now, my God, if you can't be happy with 500 pips, maybe you can't be happy, period. Let's look at the British pound. We don't look at this a lot. The Brexit thing, who knows what's going to happen there. Stayed away from this trade altogether because here's the weekly. All this information is in the scanner. Stayed away from this trade altogether because of that fundamental, they could, somebody could fart loud in Britain right now and this thing could go down 300 pips really quick. So I'm just, even though we're kind of getting back above 144, 47, I just don't, I don't think you need to, you can really damage your account, especially, if some impacting news could affect this thing in a big way and you're playing around with it and don't have the stops in, you are looking for trouble. So let me bring the dark clouds in again for a while we're talking this morning. Aussie dollar, again, no leverage down here. Here's the 240s. If you got to trade this thing, here's the inflection points. These are in the scanner. 72.48. 71.98. You got a big number down here that we hit, that we've talked about. That was a big breakout number from before. God dang it. Here we go. Well, can't get much. Okay, here we go. So the big number before that we were really, really focusing on was this 71.69. I know it by heart because we just talked about it a lot. So we reached yesterday a low of 71.76, pierced it a little bit. This is a little bit more of a kind of a Japanese yen-ish type trade. You're looking at back in the past. You see these in the scanner. If I go into the Forex section, I can pull this up. I can look at the weekly. There's that number down there. That was a huge number too because, as we look at these profiles, the longer they're in force, the more impacting these particular inflection points have, period. Moving forward, looking backwards. So this 71.69, we've hit it. How do you play defense on this type of trade? What are you looking for? Again, what's your risk reward scenario? If you're playing this bounce down here, your target literally is going to be on the intermediate 73.42, but you've already met short-term targets as we bounced here 72.48. So, not a terribly profitable trade, but if you're playing this thing like the Japanese yen trade, I think you've got to look at ultimate targets around 73 and some change, like we talked about on the daily unfair lows. And did we cover all the currencies I wanted to cover? The euro. Here we go. All right, so we talked about the big inflection point down here, 111.43. That's still going to be the case. That's the POC on a relatively wide box. 111.43 on the euro. Haven't hit that yet. Talked about the dollar reaching some inflection points possibly up top. Again, a little bit of an inverse relationship here. I don't know if there's a ton of leverage on the euro here. So where is the leverage? I think on the currency scene, like we've talked about, what's the clean and clear situation? It's been the Canadian dollar getting back above 129.60 and then being able to ultimately reach these 133, 107s. And here's the Canadian dollar kind of reaching some 240 unfair highs. Support on the Canadian dollar right now, 130.22, 23. Why is that the case? If we get any pullbacks into there, that's the 240 regulator of the trade up here, and the upside target is 133, 107 on this particular trade. All right, I think we're covering all the usual suspects here. Let me go back into this really quick. Let's hit the DAX. I'll show you what's happening here. You know, had a little bit of a bounce off of these 97, 98s down here, but I'm not a big fan of being long this right now or any indices. We're going to talk about that when we come back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you can earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member, FDIC.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. Looking at the S&Ps, looking at the breadth, and somebody in the den said something really important. Sometimes it's, if there's no leverage on any of these instruments, don't trade. I mean, it's easy to say, it's hard to do when you're sitting in front of this and seeing the lights flash all over the place. Trust me, I'm a victim of that myself. But case in point, I mean, they've got a lot of cool order entry functions now. I know you guys are probably aware of all of them, like an OSO order, these what-if scenarios. I'm just going to choose the OEC platform. That's at a couple of futures firms I know in Chicago. You put in an order. Like the other day, this is what I did personally. Put in an order on the S&Ps, 2057, market if touched, short. If that gets filled, then this OCO order goes in place. I think I had a stop around 2062, something like that. And then targets down below, I think it was 2041 or something like that. So I put the risk reward scenario. I was like, okay, that looks pretty good. 3-1, whatever. I'm going to go outside in the yard and mow it, or I'm going to actually go outside in somebody else's yard and mow their grass, which I do customarily. And if it happens, it happens. I know I've got my wings in there. I think it's called an OSO order on that platform. I get a notification. Wow, I got filled. It didn't take long to even get the targets on that. That was and I was gambling a little bit. That was the Yellen FOMC, astonishing mixed rhetoric that she had, but whatever. And the case in point, what P's saying is, sometimes you don't have to get glued in front of the screen and trade everything. I know you guys know that, but sometimes it's better to walk away from some of these situations, let them happen. If you're in a trade, put the stops in the target, go do something else for a while, let the trade develop. Because if you see this thing, oh my God, I should have taken profits. It's up 3 ticks, and I was short, and I need to protect myself. And it's a lot of things that can go through your mind when you kind of get more into the micro level, sometimes stepping back. And a lot of times these micro level trades, these machines got that licked now. So, I mean, like a 3, or let's say even a point or 2 on the S&Ps back and forth, that's noise. That's noise to computers who are doing this type of trading on a very short-term basis. My personal opinion is, I think the only way to be John Henry and beat the machine is to really kind of back up and look at a little bit more broader picture, because this intraday high frequency back and forth on a micro scale and looking at like a 1 minute chart or a 3 minute chart, my personal opinion is they got ways to kind of shake you out of those micro noisy trades. So that's my 2 cents. And I am going to go mow somebody else's yard today. All right, so taking a look at Apple. Let's take a look at this one. All right. It's the wrong stock. Apple. All right, so still, not, I mean, we've had some good moves down on this, there's no question. But right now, talking about leverage, there's not a lot here on this particular stock. And if you are considering buying this on sale, I still think you might be barking up the wrong tree. The shorts, again, I think you got to wait on this one. Why? You got a new profile attempting to appear on the weekly. You're still above on the daily, 93.81. Pierced that was disturbing to me. But getting a close below 93.81 again is going to allow you to use that to play defense. Can you step in early? Yeah. I don't think it's a valid situation yet. Plus, you've got this weekly new profile attempting to appear, which is obviously within the scanner. I'm going to go into the scanner. There's that yellow peel back happening on the red. That you want to sit tight on this one and just wait for some new information to develop. You will know those inflection points on the long term. I think that this is going to stay yellow in force today, which means by Monday morning we'll have that new profile to lean against. Then you'll have some sanity. And Tom, I was telling everybody earlier that these breaks are way too short on the show now, and you guys are really mean to me constantly, and I can't even get a glass of water, so it's awful, the environment. I'm just kidding. I love working with Tom and TFNN. This is an incredible network. All the hosts on here are extremely knowledgeable. I mean, I get such a killer perspective listening to tidbits on these shows all day long. And again, talking about trading against the machines, it slows my trading down. And that's what really, I mean, if you look at the studies that they've done on trading a ton, and again, your broker's not going to want to hear this from me, but slowing trading down really can allow you to increase the probabilities and wait for these things to line up. And if you listen to the Toms of the world, David White, Andy Heck, Basil, on down the line, Larry, you're going to be able to get some perspective and you know, picking your battles at really high probability areas based on those perspectives is a really good thing. And I'm telling you this from experience. You get in here and sling it around very, very often. The commissions, you look at the end of the year, and they are apparently large. Okay, so going into the scanner, let's take a look at the ETFs. And let me actually look at this stock that somebody's throwing out in the den really quick before I get into that scene. ETFC. Talking about brokerage commissions, E-Trade. Yeah, I mean, let's think about this. If you have a brokerage account and you look at the paltry payouts that they give you on housing your money, what is it lately? Does anybody know? What is E-Trade, Ameritrade, Thinkorswim, whoever? What are they paying you if your money sits in your account these days? What is it? 0.00 blah 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 whatever. And if you're borrowing money, so just to let you know, and Penson Financial, I lived in Dallas. I basically worked there when I was there. That's their lockbox. The spread, the debit credit spread, really is what they're playing for these days. All right, so let's think about the rate structure, and let's think about E-Trade Financial, and let's think about the spread there. All right, remember the banks, the financials, they need a widening yield curve. So what the brokerage firms can do is rip you off more on the debit credit spread as that lending payout rate widens. We're going to talk about this a little bit more and answer the question on E-Trade Financial technically when we come back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. And I never mention these numbers, maybe twice a year, but if you guys ever want to call in, 877-927-6648 and internationally 727-445-1044. So there it is. I've done my twice a year explanation of what the numbers are to call in. And the reason I'm saying that is, I was telling you some things that, the OSO orders before. I was using OEC to do this the other day. That works. That kind of works for me to kind of put these what if scenarios in. If it gets filled, then the wings happen and all that. I had a friend in Florida when I traded down there before I went to Chicago. He had this 2-minute rule, which worked for him. And I'd love to hear what might be working for you guys, and maybe everybody else can hear some of the good and the bad. But his rule was, whenever he'd want to get in a trade, long or short, he'd see it, it would happen. He'd wait 2 minutes, and he did these studies overall. Like 68% of the time, he got a better fill if he just waited 2 minutes after he actually wanted to get in the trade. Just ridiculous, crazy stuff like that. But we'd love to hear what's working for you. Okay, cool. All right, so here's E-Trade. So talking about the widening yield curve, and I was slamming the brokers. Those, you know what? That's actually a tough gig now. There's a lot of risk when it comes to being a brokerage firm or a clearing firm. It is a compliance freaking nightmare. All right, and what they've done is they've basically tried. They being FINRA, they've basically the self-regulatory organization that everybody agrees to arbitration on, and then they're cuffed up. But they've made it so regulatory heavy that these brokers actually they actually need to charge more, is what's happening now, because their overhead to deal with the regulatory environment that has gotten so heavy on the overhead, it's shoved a lot of small broker dealers out of business. So back in the day trading days and up until probably 5 years ago, maybe, you've had, if you go look at the statistics on the amount of brokerage firms that have actually had to throw in the towel, because they can't really afford to operate, when they have to hire a Series 27, a Series 10, blah, 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 and then do all this reporting and all this audited financial crap that they got to send in. They literally have to hire 5 extra people these days. And then, the rates have gotten competitive. So I'm actually in awe of anybody running a brokerage firm these days. Obviously, E-Trade's been around. And so when you have this breakout, I actually think this is valid. All right. Now, the financials in general, we're going to take a look at those. And 25.93 coupled, that's weekly on fair high. I mean, I know we're just kind of sitting around here on the daily. This looks relatively good to me. So this breakout, they obviously like a widening yield curve. The hint of that from the Fed, who knows if they're going to follow through. Those guys are it's just completely unreliable. And it would be nice if they were all on a cruise boat and it tipped over one day. I shouldn't say stuff like that. But they're completely unreliable and not really acting like the Fed should act. So as we look at this, we're going to pull up the XLF really quick. And, talked about this. This was not, not the, no leverage here, really. You got a new balanced area, 2358, 2204. I like how E-Trade's acting relative to this group. Again, here's the daily. As you can see, there's not a lot of confidence here. So when we go look at the 10-year, we talked about, don't get married to, hey, everything's going to hell in a handbasket with, as we pull back after that announcement. This is the daily on the 10-year. Again, this all affects the XLF, which is kind of E-Trade financial relevant here. But we're still in the balanced area on the 10-year. And you got to keep that in perspective. We were actually lower than this over a month ago with no Fed impending, oh, my God, we're going to raise rates a quarter point. Yes, we did it. There was none of that, and we're actually higher than where we were. So, does that bode well for ETFC? I actually like the action. I like how it's a relatively strong stock in that sector, and these are the types of ones you want to look at to purchase, actually. And if you'll notice before, when the rates when the 10-year plowed down into that support before, there it is. There's that week, and now we're actually higher. So, again, looking at this from a relative scale, I forgot who asked this question. Not a bad situation. I can drag this out farther if you'd like. Let's see. Reading the questions. Nothing. All right. Okay, we're going to go back in the scanner really quick. And we're going to take a look at the energy sector. Let me go back to the ETF section for a second. Let me rank this properly. Daily. Okay, that's what I wanted to see. All right, so you look at this. This is real. Every sector breath negative except for the energy sector. So that's why I'm not exactly excited about the S&Ps. Any bounces you're looking, and we're going to talk about that 2043 area in just a second on the S&Ps. Should have already talked about it. Crude, remember, okay, so let me back up and go back to the XLE chart for a second, NE signal. We could have looked at it right on the scanner. All right, so not exactly outperforming leading up crude. This is what's concerning to me for crude. Is we talked about the Canadian dollar. We could look at the Russian ruble, talk about the XLE, talk about where crude's inflection points are. But again, kind of bounced off the support yesterday. There's that 64.48. We reached a low of 64.49. But again, no leverage here. So when I'm looking at the XLE, even though it is a very outperforming ETF right now, what's the play here? There are some stocks here that may need to be sold, and those are the relative strength situations. Let's take a look at Chesapeake Energy. Again, this is a story stock here. Let's just kind of omit that one because it's kind of like the Brexit situation. Let's take a look at this one. NBL. No, that's not for me. Let's try to grab something else here. Yeah, let's look at Baker Hughes. Here we go. All right. So, again, Baker Hughes. This is one, again, kind of wrapped up in another stock. Obviously, you guys know the news there. But let's take a look at this one. Any breakdowns below 44.72, proven to be a pretty weak stock here. And 44.72 coupled with that 140, 194. I think you might have some clear sailing on this to sell off even more so. We're going to come right back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. We were talking about Baker Hughes. There's some good longs in the XLE. There's stocks like Baker Hughes that just haven't participated on these crude oil kind of breakouts. But again, we talked about crude oil. That's a kind of a crapshoot right now. So therefore, we don't have any idea about the underlying. Therefore, we really can't get too excited one way or the other about some of the underlying. So it's kind of like buy the strength and sell the weakness. But ExxonMobil, I've got a weekly chart up. I'm just showing this for example, guys. Okay to be long, not okay to be short. We caught these bids down here at 73. We talked about that. We talked about the relationship with crude oil, higher lows, lower lows in crude oil. Boom, there's the inflection point back in January 2016, January 18th, that week. So talked about the targets up top. That was about a 15% move, 17% move. And then this crowding action, all right? And that definitely okay to be long, not okay to be short. So here's the situation on the daily. So again, not a lot of leverage here to go short an instrument like this, but okay to be long. Hope that makes sense. There's a couple of little winners down here. Let's see what the little SWN baby's doing here today. Yeah. I really like this little puppy. So again, you got the daily regulator of the trade up. Here's the weekly. And price action well above this profile that outputted. We've got a cast over here we're trying to direct in the background. So this profile appearing below price action is very bullish, as we've talked about. You've got a little place to play defense here. Got to say uncle below 1073 though. All right. So we're gonna take a look at. Let's get rid of our charts here. We're gonna take a look at Goldman Sachs. I mean, the XLF. Again, we talked about that wasn't a super interesting situation relative to the action. And the energy sector has just rolled over pre-market. Wow, everything's red. Amazing. The XLF. Okay, so we're going to look at Goldman Sachs. We're going to look at the sell structure here. See bottom. I was looking at this earlier. This one's sitting on the edge of the cliff. All right, you got to keep your eye on the 10-year. You got to keep your eye on the market. Goldman Sachs. I hate this company. I was invited. I went to their up in. They had moved their headquarters across the river to New Jersey. This was back in. I want to say 2000. 2099, 2000, 2001, somewhere in there, because it was cheaper, of course. Set up a meeting, flew up there. They canceled the whole meeting, knowing I'd spent money to come up there. I've hated them ever since. Anyway, so we're sitting on the edge of the cliff here, weekly unfair lows, daily unfair lows. I have a personal grudge against this company. And any type of moves down below this daily unfair low, weekly unfair low, I think it's already showing itself. That key reversal on the daily, really sick for this stock, showing itself. I think you got a little bit of a short opportunity here looking at that group. Yeah, Dano, I hear you. I do not like these guys. Let's take a look at Facebook really quick before we leave. 1 billion unique looks in one day. Still nothing to short here. Looking for bids on this. Kind of in no man's land. Guys, thanks a lot. Stay tuned for Larry, Tom, and the rest of the gang on TFNN all day. Have a good Friday and have a good weekend.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.